Global markets have been doing incredibly well. We've seen Bitcoin and the Nasdaq and literally all the major indices just go nuts. Also, China is recovering, at least in terms of the stock market at the current time. And it looks like things are only going to get better. Bitcoin price eyes 11% monthly gains as the DXY threatens a major plunge. Where is this plunge coming from? Well, it's expected that the Fed will lower the federal funds rate by 50 basis points. The market is getting more and more optimistic of increasing prices as registered by open interest calls versus puts. But look at the 24-hour volume. The puts have been taking over. Are there cracks emerging in this rally? Or is it just going to be plain sailing? We'll look at some things that are not going to be spoken about elsewhere, and we'll seek to answer that question. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back, CTKS family. We hope you had a fantastic weekend. When we're looking at Bitcoin, what are we seeing here? The start of a sell arc, and we talk about sell arcs inside the masterclass. Now, this could be a retracement, of course, down to around that 63,500, and that will just freak people out wholesale if that happens. Why is that? Because literally, most people just want the price to go up and up and up. We certainly don't want the price to go down. Going up is fine, this is bad. Going up is fine, this is bad. This is really bad. But hang on a sec, it's just all part of market momentum. Markets are always moving in a wave. They're going up and they're going down. What happens when we go really, really high up? We come really, really high, low down. That's because we're not supporting the momentum as we go. We need to support momentum, or else we can just fall off a cliff, and we don't want to do that. Please let me know in the comments, what do you understand about the concept of price moves in a wave? And how do you use that in your trading and investing psychology? Because it's really important, just understanding that these down waves are natural. Looking at the news, stocks are in and bonds are out. Top trades for the rest of the year. Now, I want to draw your attention to this little tiny article right here. This is a problem, and a lot of people are not talking about it, or maybe they don't understand it. Japanese stocks set to fall on rate hike fears after Expires win. One thing to understand, smart money always profits first, and we've seen, and we've talked about this for a while, the VIX is just turning the corner. We've seen that we've been really, really bullish, and that momentum is starting to fade somewhat. We can see it inside the Nasdaq. And this is something that you should be concerned about. This big drop-off came after something really interesting. The new election of the Japanese Prime Minister was not well received by the Japanese stock market. Look at this big drop down. And hang on a second, what are these big drops here for? And here, and here. Is there some connection between the Japanese stock market and the potential for the Japanese carry trade, which gives us a lot of curry to get back on the dining room table? Yes, there is. A lot of people who just trade and invest in, say, the crypto or the stock market just don't look at FOREX. That's a really big mistake. Look at the gopher, that cute little gopher, the dollar-yen combo. What did that tell us about where markets were going? And where is Bitcoin going currently? It's coming down at the current time. Now, what do we anticipate and what do we understand by Bitcoin coming down? Bitcoin is literally the canary inside the coal mine. If Bitcoin is coming down, we would anticipate negative price momentum inside the major indices. If Bitcoin is coming up, we would expect the exact opposite. I just inverted Bitcoin there to show you on the Dow. Now it's a normal price action. How do you know it's normal? Because low prices are closer to the axis, like closer to zero. And then the numbers get bigger, like 1, 2, 3, 4. We can see this is 65 and that is 66. This is an uninverted scale. So it's pretty important to keep your eye on Bitcoin, even if you don't trade or invest in it. Ken, why is that? Because it affects the stock market. And what is Bitcoin telling us right now? Bitcoin is not happy. We used to have an ad in Australia, not happy, Jan. If you know that ad, please let me know and reach out inside the comments. What we're seeing right now is that Bitcoin is coming down. What is it doing to Ethereum? Naughty Bitcoin. It's pulling it down. What about Binance Coin? CZ was released. Of course, Binance Coin must rally. Well, no alt can escape Bitcoin's gravity, so no, that's not on the cards, not if Bitcoin comes down. What about Solana? Yeah, it's coming down as well. XRP did really well across the weekend. XRP is a very interesting project, but it's getting pulled down as well. What about Dogecoin? Yes, sirree. Getting pulled down? What about ADA? Yeah, it is. Total crypto market cap as well. So what are we seeing here? There is a potential unwind of the Japanese carry trade. Yes, it's going to give us a lot of curry in that carry trade. So just be aware, we could face negative price momentum across the board, but that's nothing to be concerned about. If you understand the CTKS method and you've done level 1 and level 2 standard certification, you already know where the advantages and opportunities lie. You just wait for them. And speaking of that, if you're inside the masterclass, have done L1 and L2 standard certification from CTKSmethod.org, or you are a current member of the CTKS Method service, you'll get the profiting from CTKS Method structure for absolutely nothing if you fill in the form by the 9th of October. The form is in the URL video description, so please fill that in. Do not miss out. If you don't fill that form in and the 9th of October just rolls around US time, hey, you just lost $600 worth. Please don't do that. And if you would like to get into the masterclass, Shah and Al have very kindly offered a CTKS partial masterclass scholarship. Your name could be here. The link to apply for this scholarship is in the description as well. Thanks so much, Shah and Al. That's just beautiful. What we notice here is that US liquidity is dropping off, and this is generally not such a good thing. It typically creates negative price momentum, and when we get negative price momentum inside the markets, we would expect the VIX to go flying up and the major indices to come flying down, so please be aware. I would suggest a key thing today is to look at the major indices and see if they're starting to gain power or starting to lose power. So far, we're seeing some fairly good signs. It is early days, but please keep your eye on any potential CTKS cuts, because if it's coming up, it's a very, very good sign, and you'll learn far more about how to practically apply CTKS cuts in the Profiting from CTKS Method structure course coming out on the 9th. Crypto is really volatile. We must understand the intercorrelation and interconnection between charts. A lot of the times, people just make their buy and sell decisions based on a news headline or based on something that somebody says in a random YouTube video. You must move beyond that. You must put scientific analysis behind your buying and investing decisions. It's also important to have an understanding as to where price could go. We draw CTKS paths to give us an understanding of where price could go from a normalized positive price path, from a consolidation path, and from a negative price path. We literally were sitting on the edge of a razor blade around the first week of last month. Well, this month really, but this month is nearly finished. But look at how things turned around. We're heading up to the normalized closeout on the positive price path. You don't want to be scared of volatility. You want to make it your best friend. And the way that you do that is to have plenty of rules. When we look at total crypto market cap, it's also following the normalized CTKS path. And don't forget, these are drawn at the start of the month. They estimate positive price path behavior, neutral, and negative price path behavior. You must always think three-dimensionally because price is always moving up and down, up and down. This is just the way it goes. But actually what we do is we draw in scientific analysis to understand where price could potentially go. And we can see that gold is doing really well. It's on par to close out at the normalized positive price path at 26.56. This week, please keep your eye on the VIX. You need to know where volatility is going because if volatility is coming up, guess what the markets are doing? They're not happy. They'll be coming down. One thing that you want to keep in mind, you must always understand the structure of the chart that you're looking at. For example, when we look at this structure, we could see a spike up to 1780 without too much of an issue. Why is that? Because this is a positive CTKS gap, a gap inside price action, and it just basically means there's nothing there to slow it down, either on the descent or on the ascent. And we saw previously that this particular CTKS gap, when it was filled, it came down and hit structure. This is why it's so important to know where structure actually is. The vast majority of people have no idea where structure is because they actually analyze recent price. You must analyze all of price. All of price is literally all of price. According to mainstream media, there is no resistance above a surpassed previous all-time high. We know through the method that's absolute rubbish. There is always resistance above. And we saw the S&P 500 come into its structural resistance at 57.62. And it's been trying to get above it, not with a great degree of luck. And with the VIX starting to spike up, we may see lower structural levels of support hit again. Please just be aware. Just have a bit of a focus on where things could go. Things are a little bit negative at the current time, but also have a focus that they could turn positive. This means that you're not just trading one side and setting a story that may or may not play out. You need to be flexible. When the Japanese curry trade hit the markets, and I mean curry, it's the carry trade, but I call it curry trade. When it hit the markets, it really brought the major indices and Bitcoin down sub 50,000. So please be aware. You need to be aware of if you've got negative price momentum just inside the market, just wait till it shores up and it bypasses resistance. And please, please, please keep your structural levels in mind. It's going to be incredibly important at the current time. Across the weekend, we broke out from the 66 or 65,662 structural support level and we came up to the 66,000 structural resistance and we rejected. We've also rejected our once previous support. You can see that there's negative price momentum here. Would I be entering? No siree, no way. I need to see that price is actually constructively increasing and improving. The last time the Japanese carry trade hit the markets, it tanked things, so we need to be very aware. It doesn't mean it's going to hit again, but it does mean we need to be sensible in terms of how we do our trading. If you're doing investing, why, it could be a really ripe time to pick up some bargains if the carry trade plays out. We always look at Bitcoin and total crypto market cap together. It's very important to look at both. They're kind of like a good functional husband and wife team. They actually like each other. And what are we seeing here at that 2.266 trillion? We hit structural resistance and yes sirree, it was all over. And now we're coming down. What is happening under the hood is that a lot of institutional traders and investors are looking at the Japanese carry trade and saying, oh God, this thing may unwind again. There are many different ways to trade or invest, and we remember that all investors become traders anytime they buy or sell. So learning to trade is absolutely vitally important if you're an investor. We can see that we're currently under negative price momentum, and we've sold off really hard. We've come down through a lot of structural support levels, and we're getting a bit of a technical bounce in here at the current time, but we're still under that particular level of resistance. If we get above that level, confirm it, and just start to get above that 2.266 trillion, the game is back on. But what happens if we don't confirm anything? We may do just a retracement and a resumption down. Now, if we do that, you've got to be aware that that can happen. And also, what are the structural levels below? Okay, let's have a look. Well, we've got a bit of a negative CTKS gap here, and that negative gap could bring us down fairly fast and fairly hard. And that's going to be led by Japan. It should show up inside the futures, so that's one thing that you want to bear in mind. And it could take us down to prices not seen since Friday. Whatever you do, if you have your structural indicator on, you know if price has got support underneath it or is close to creating a bit of a headache. And depending how much you lean into the market, buy, and inside the class, I'm going to show you how I lean in hundreds and hundreds of thousands of dollars worth on spot trading, not derivatives trading, just spot. So this is important. If you get the wrong timing and you get on the wrong side of the trade, even a move between there and there can be very problematic. A good thing to think about is the relationship between gold and Bitcoin. When the Japanese carry trade unwound, it just took Bitcoin on a roller coaster ride downwards. JP Morgan says, don't worry about it, the Japanese carry trade has already unwound 75%. It's only 25% to go. But if the Bank of Japan start to say, oh, we're going to increase rates and we're going to attract our capital flows back from the rest of the world, because don't forget they had negative interest rates at one stage, no investment opportunity inside Japan. If that starts to change around, oh boy, we could see a lot of capital flows back to Japan and out of the US. Anyway, getting back to this, when the carry trade unwound, what happened to gold? Gold actually went up and then it went down. One thing to just understand with gold is a really cool material to get involved with from an investing and trading perspective. Well, maybe an investing perspective. Trading, yeah, it could be okay, but it's really not that good. Crypto is way better because it's got so much volatility and it's very forgiving. When we saw this unwinding, we saw gold rally and then drop nearly back to its base. Of course, that was not what happened with crypto and Bitcoin. Bitcoin went down hard, but it created so many buying opportunities. If you actually bought around that dip or just close to it, you don't have to take out the dip itself, you would have done incredibly well. The percentage gains on Bitcoin versus gold are absolutely, undeniably, incredibly large. But you have to manage the volatility. We can see directionally at the current time, Bitcoin is moving and diverging away from gold's path. Gold is coming up on geopolitical concerns, and Bitcoin is still very much a risk-on, risk-off asset class, whereas gold is more a flight to safety. At least at the current time. That may change in the future, but for now, it is what it is. With this in mind, what are the key levels to look forward to for gold? We want to hold that 2662 level as structural support, and so far we're doing a pretty damn good job of it. If the carry trade does unwind, we would expect to come up to 2672, and if it continues to unwind, we would expect to re-challenge the 2662 level, or even potentially lower. Why is that? Because when people feel that markets are tanking, they take their money out because they need it. Now, what happens if we see gold start to trade below 2662? The next level of structural support is around that 2647 mark. That particular indicator is really special. Gold has been trading for literally 70,000 days, and these lines mark up what that particular structural support and structural resistance is right across those 70,000 days. Just magical. And you can learn to do this yourself with level 1 and level 2 standard certification. And if you're not looking at a chart in this direction, that is, knowing where the structure actually is, you're going to be in a world of hurt sooner or later. What I would focus on, or what I would recommend, keep your eye on the VIX, see how it spikes, and if it spikes. If the Japan thing is overblown and the Bank of Japan says, no, we're going to be accommodative, don't worry, we're not going to increase interest rates, we're just going to leave everything as it is, therefore the party can continue. Well, that's one thing. We would expect to see the VIX come down. But if intervention actually occurs and the Bank of Japan says, we're going to increase interest rates because the PM is saying it, that's not good. Keeping your eye on the VIX and also on the futures to see any potential changes in trend, that's what you need to do at this current time. It seems as though the major indices are just trying to digest if the Japanese carry trade is back on or if it's not. So far, things are looking relatively constructive. Maybe it's a storm in a teacup. Japanese tea. But the charts will tell us one way or the other. Have a great day or night ahead, my friends. And the secret word for this video is curry. Have a great week ahead, my friends, and bye for now.